Good day traders, welcome to my YouTube channel. I really want to thank whoever that has already subscribed. Please like the videos and give comments. So in today's video, we are going to look at why 95% of the Forex traders don't make it in the Forex market, or why majority of the traders are still losing in the Forex market. So the reason is simple and I'm going to give it to you. So number one, majority of the traders are losing because they are stuck on the lower time frame. The lower time frame, when I talk of the lower time frame, I mean the 1 minute time frame. I mean the 15-minute time frame. I mean the 1 hour time frame. So these are the trading time frames that majority of the traders like trading. But what do they forget? They forget that these are only entry time frames. They are not time frames to come in and start your analysis on. So they come do that mistake, go in the markets, start an analysis on the 5 minutes time frame, and wow, when the market starts, what happens? They are chopped, they are burnt, and their money is lost within a minute. And they start blaming the markets that Forex market is a scam, all the brokers are trading against them, or maybe they are unlucky. So in today's video, I'm going to look at GBP USD, and I'm going to give you an example of exactly how you should come into the Forex markets and what you should look at in order to be profitable. So on the monthly time frame, we clearly see that price was moving previously to the downside, and it made some nice breaks of these lows, swing lows, and these swing lows represent external range liquidity. And in my videos that I have uploaded so far, I always tell you that whenever price breaks or takes external range liquidity, it has to seek for internal range liquidity. So price, upon breaking these lows and seeking for external range liquidity, it had to come back into the range to seek for internal range liquidity. We have here a nice fair value gap which price came in, tapped in, and you see the massive rejection that happened for 3 good months. So price came again after making this higher low and went higher, and we are now seeing this order block as a potential area of rejection on the monthly time frame. So we are seeing that price is going higher nicely, making some higher highs and higher lows, which is one of the ways of determining an uptrend. So this uptrend, you can clearly confirm this uptrend because price is making higher highs and higher lows. So if we go to the weekly time frame, now we have a picture that we are buying on the higher time frame, which is the monthly time frame. This monthly previous month closed as a bullish candle, and we expect our current month to be bullish as well. So you have 4 weeks of trading when you have a bias of buying. So you go on the weekly time frame when you know that for the 4 weeks I'm going to be looking for buys. When the market is selling, I'm out of the market because my bias is bullish for the coming weeks. So transposing what we have looked at on a higher time frame, that is the monthly time frame, to the weekly, we clearly see that our trend line is holding because price has been tapping in it softly and moving higher, making higher highs and higher lows. So this, we got the bias from the higher time frame. Now we are transposing it to the lower time frame. So for the first 2 weeks of the month, price was still going lower. Uh, and now we saw, sorry, for the first 1 week of the month, price was going lower into this fair value gap to retest it. So upon reaching this fair value gap, we saw a massive rejection. So this was also our context area on the weekly time frame, price took out external range liquidity and now went back into the range to seek for internal range liquidity. And the only internal range liquidity on the weekly time frame was this fair value gap, which we saw upon leaving or failing to reject on this fair value gap. The only remaining last line of defense was this fair value gap, which was lining properly with this order block. So now we are having a massive rejection upon tapping in. So we are going in the markets for 4 good weeks having a buying bias. So each week that starts, you have to be with a buying bias. When the market is selling, please just know that it is retesting an area of interest like a fair value gap or an order block. So the past 2 weeks we had is buying bias. So on the daily time frame, we transpose and now we have how many days? 20 good days of bullish bias. So that is how you can go in the market when you're confident enough. From the higher time frame, now you are on the daily time frame, knowing that for 20 days, for 20 good days, those are the 20 days of trading. Remember, the forex market is open 5 days a week, and now the month has 4 good weeks, and you know that you're going in each week buying. So this is what we are seeing. You will get massive profits when you have such a bias. So on the daily time frame, we see the market making some good buys, retracing into the areas of interest, this fair value gap that I put on the weekly time frame, and going higher to break the external range liquidity. Now, even if we have broken the external range liquidity, we know that the market could retest these areas into fair value gaps or order blocks in order to go higher. So members, if you have such kind of knowledge, if you have such kind of information, you truly go now on your time frames of execution, which is the 1 hour, the 15 minutes time frame, or the 5 minutes time frame. When you have buyers on the higher time frame, the higher time frame, you go on the lower time frame. When you're confident enough that you are only buying, you wait for your market to open. When the market opens, you go in the markets to look for only buys. So if you do this, you will see your trading profits changing. You will see your trading massively and massively improving. So I have given you a tip. Please follow it, and you will give me comments in a few days after you have seen it working. May the markets